Hey traders, what is going on? Today I want to go through a few questions that you guys have been sending me over on Instagram. These days it is a little hard to get through all of your messages at once, but I do make time for it. But there's a bunch of questions that you guys have been sending me over on Instagram, which are predominant questions that I think deserve good answers. And so I want to get on here and I want to be able to, let's just answer some of those questions together. It's like 12, 13 questions, something like that. So let's get to the first one. Do you trade every day? Simply no, I don't trade every day. I only trade specifically when I see opportunities. And sometimes what holds as a possibility is that if you have a certain amount of trades that you're looking to take per day or per week or something like that, and let's say you have the idea that you need to find at least 3 trades every day. If you don't find those opportunities throughout the trading day, as we get closer and closer to the end of the day, your mind, maybe without you even really noticing it, will start focusing on finding those opportunities. And you may even see things that are not actually there on the charts as reasoning to enter the market. More than going based on your plan, you are willing to just take a trade because you want to be active. You want to keep trading, right? So personally, I don't hold those limits to myself where I am only in the market to find suitable ideas that go in the general trend direction. Right or wrong, I'm always going in that direction, right? So if a trading opportunity doesn't appear today, I'm not going to be mad about that. Or if I don't trade for the week, whatever the case, I won't be mad about that. On the other side of forcing trades, there is the possibility that, you do take trades, or you do take one trade every day, and for the last 3 days, you've been losing those trades. That is fine. I'm just continuing to go on with my plan. Number 2, am I waiting for the CPI news? No, simply no. I go over this time and time again, but I am not a trader who uses the news in the slightest. I'm strictly a technical trader. I only use price action and what is on the chart in front of me. That he say, she say stuff, I don't care about. Governments lie. These people are frauds. I'm thinking for myself. It's really as plain as that. By simply being a technical trader, I'm using certain technical forces like determining the trend, using risk to reward in my favor, using the pressure of my candles to have some type of idea for, is the trend bullish, is the trend bearish, what is the major trend, what is the minor trend, and am I going in the flow of that, right or wrong, right? Because sometimes we might be in a trade, let's say towards the downside, you get in a short trade, you get stopped out, and then the price continues down lower. All these things are fine as long as you're taking your trades according to your plan, right? Is your risk to reward there? Is your reason for entry there, right? So another reason why I don't really go through and use the news as actual support is simply because the news adds to everything that the market has to offer, right? So you may be in a trade, and sometimes we send out these trades in the community where sometimes I might place a pending order that seems really out of reach, and I may not know the exact reasoning for why price will go down to that area to enter my position, whether I lose it or it becomes a winning trade. For some reasoning, whether it will take 1 minute or it will take 5 hours, 10 hours, price will find a way to go to that extreme area, breaking the supports, just playing to the market structure that is there on the chart. Sometimes we don't get entered into those positions, but that's all fine. That's all working towards the plan, knowing your numbers inside and out. Number 3 is, what currencies do I trade? So I only trade the majors and the minors, right? Now, there are some other things I might trade which are not currencies, like I might trade gold, I might trade oil, US oil, crude oil, and I'll trade some cryptocurrencies. Like sometimes I'll trade either Bitcoin. Used to trade Ripple when you could. Simply enough, I don't trade exotics or any of those other things. I don't really do indices or anything like that. It's not really my field. I really just stick to those. I think the exotic currencies have a really high spread, and I just don't want to pay those. Yeah, some brokers right off the jump have really high spreads for the majors and minors, and those things are just unnecessary. Like, I don't really be watching the fees and stuff like that be accumulating when you're trading. But for the most part, as long as you have a good broker that isn't taxing you too much on those degrees, like the commission, the swap, all those little things, as long as they're not taxing you too much there, I think the fees are pretty much unnoticeable. Bro, how do you handle stop loss and psychology? Any humble advice to improve my performance? Sometimes stop loss and psychology beat me, and I don't close when I should close. This is a really good question, okay? I simply look at it like this. Life and the markets are very much interrelated. I see them every day. I really see them much as the same. Every day, to understand life a little better, I kind of just relate it to the market. There's just a good understanding that it's people that are influencing the market, and in turn, the money influences the people as well. They go hand in hand. The psychology is very much the same, or it is represented and it's displayed in both cases, right? Just in money and in people. I say that to say there's a video coming out on my main channel called Expressions. Look out for that. You should check it out. I go through there, even in the 7 principles of trading, where you can get that. It's like $3. I go through and I explain simply that the market, or the composite man, as some people may say, is there just expressing itself. And as everybody has throughout whatever period of time, years, days, whatever it is, there are highs and there are lows and there are averages, okay? So it's just important to be mindful of these expressions. What phase of the expression are we currently in? Are we peaking? Are we going down? Are we settling at an average? And these things are just there in the market and in life, right? So I have a really good understanding of my numbers and stuff like that. So that is also really important, just to understand, okay, if I lose a trade, why did I lose this trade? Was this a reasonable loss? Was I either proven wrong? Was my stop loss hit too early? Maybe sometimes what happens is your stop loss gets hit, then you get an opportunity for a re-entry. But all these things are just factors that go into that, are factors that really used to go into my mind as I'm thinking about my stop loss actually being hit, coming from the phase of just being hurt and, damn, why did that have to happen to me, right? And the whole psychology thing is just to understand and realize that so many other people, so many other successful people around the world say, let's say a person always failed and failed and failed. They can have that one experience which changes everything for the rest of their life, or whatever, just made everything in the past seem worth it. So the same idea goes, just to have an idea of a risk to reward. What is my ideal risk to reward that I'm taking on every trade? Okay, am I risking 1 for 6? Am I risking 1 for 3? Which is what I would just say as a minimum, just stick it to that. Sometimes there's things in life which I don't like. If I have a plan set out and something comes and stops that plan, I'm more just to the understanding that sometimes life is saving me from situations that I shouldn't be in, right? So there's definitely a lot of things that I reduce forcing in real life, because I've learned in the markets that if you try to force a trade, the market, you could win that trade, but there's a good chance that the market will just lash back and take, it could take your profits. If you were too emotional on the whole thing, you could have overinvested and it would just be more of a hurtful loss. So I'm just more mindful of what is happening in the situation. Okay, have I just taken a bunch of losses? What were the reasons for these losses? Were these emotional losses? If they were, I'll probably just take a little break, regain my mental stability, drink some water, sleep, calm down, and get back to it from a calm state of mind. Because in the markets, you need to be calm, and in life, you simply need to have a calm approach to these things. And lastly, just not closing when we should be closing. Always better to just accept the small loss so that we can keep playing later. Because in life and in trading, if you are to lose all your chips today, there is no playing the next day, right? And I simply just had the experience as well as how many accounts have I actually lost because I did not want to close the trade, and the losses just accumulated. So eventually I just came to the place where I am willing to lose the account, as I have been always doing in the past, but at some point I'm just still willing to lose the whole account, but now I'm willing to space out how many trades I'm taking before the account is actually lost. And in doing so as well, taking required risk to reward ratios on the trades just to have some statistics to work with. After I run the set of trades, I can figure out what my win rate is, and then I can figure out if I need to adjust my risk to reward from there, or what can I adjust from there? Can I add any filters to reduce or select better trades, whatever the case. But this is just how I go about dealing with those things. From I go through any disadvantaged situation in life or anything of like that, I try to assess the situation, Number 5, do I actually risk 1% on each limit order that I place? It's not always just 1%. Sometimes it's a little less, but sometimes it's 2% max, okay? A lot of the times, if you see those trades placed in the community, the trades are normally, let's say, from one lot down to 0.01. I'm only keeping them so low, or mainly for 0.10, is so you guys understand that these trades are supposed to be taken with a low risk profile, okay? You must leave room for error because you never know when you're going to go on a losing streak. The reason you accumulate money in life to save it, if something will happen in the future, that restricts your ability to accumulate money or your ability to move, whatever the case. Prep now for situations later. And in doing so, we are indifferent with every decision. Each position is a low risk trade that we're willing to take. The next question, what type of leverage do I use? Do you turn it down on smaller accounts? So here's the thing. The brokers tell you this, maybe like just general information along their website and stuff like this, but you never actually know, or I never was informed that my leverage actually decreases as the balance goes up. So normally when I sign up for a broker or I'm making a new account or something like that, I don't really care what the leverage is. I do pay attention to it just to understand what like the situation is, right? Because if it's 1-to-1, if it's a leverage of about 1-to-1, then I wouldn't be able to place that many trades as I would, let's say, on a 1-to-500 or a 1-to-100, right? So there's just little things just like that. Basically, at 1-to-1, every dollar you have in your account is what you're able to spend. But when you have, let's say, a 1-to-500, then at that point you can, for every dollar you have in that account, you can spend $500. And then when you're trading Forex on the MT4, those convert over into unit, things just like that. They start at 1,000 units per piece. But basically, I know in North America and Europe, you have about 1-to-500 leverages, which are about average. Traders Way has 1-to-1,000. I know different parts of the world, I'm not sure exactly where, but people have shown me like some parts in Europe where they have 1-to-2,000, 1-to-3,000 leverage. So, I mean, you don't want to have to use leverage by all means. Leverage is a double-edged sword, but I always say use the tools around you to your advantage, right? Do not risk something that you are not willing to lose, simply because there is always the possibility to lose. And if you do lose that thing, are you going to accept, or are you just going to try to deny that happened, or whatever the case? The next one, do I have any books on risk management? Actually, yes. There's a bunch of books that I read. As maybe you guys don't know, but if you guys follow me on Instagram or whatever the case, there's a bunch of books that I do read. I have all these books online in a file, and I'll put that link down below, right? So you guys can just click on that link, see all the books, choose whatever books. There's a bunch of books about psychology, manifestation, trading, just general health things, food. There's CIA documents in there. A bunch of things that I just end up going through, I have put there. Am I the type of trader to do supply and demand, or support and resistance, retest, and break of structure type things? So really, I'll do both. First in my head is always to identify and find where the liquidity is in the market. So first, I'm looking for that supply and demand. Have we had a bunch of losers recently in the market going in that main direction trend? And if that stage has already passed, I know the second most structured, reasonable state is then that of what I describe as the male principle in the 7 principles of trading, where we're going to get a lot of normal looking support and resistance, break and retest structure. On the other side of those things, what comes first before the actual trending direction is that really confusing stuff where those supply and demand areas are created. Those past highs are created in downtrends, giving confusing perspectives on whether the market is going up and down, stuff just like that. But it's for me to understand that there's those two sides of it, where there's a confusing phase of the market and then there is a clear directing phase of the market, right? So I generally find that you have better risk to rewards along the supply and demand, just to look in those liquidity areas and stuff like that. And then you can just find really normal risk to reward, risk 1 to gain 3, whatever the case. But you do have both options, and I do utilize them based on what time I'm looking at the market, what the current situation is, and if we are already past that first stage or into the second stage of the trend continuation at that point. You want to learn about stocks. Is this a good way to start? Definitely just go and get the free trading package. The way that trading is made up to be, a lot of things are interrelated. There might be some subgroups of stocks that I don't go into. Stocks is definitely more news related, which is something I don't go into. But there also are other stock traders who are just trading technicals, right? It's the type of trader that you want to be. I'll always say experience is one of the most valuable things. So regardless, get the information, see what's being said. Can you understand these things? Can you relate to these things? Can you apply these things? Do you have a good understanding? Do you have a good understanding for what the market is doing while you are looking at it, right? And lastly, what TPA package should I get? So, as you guys may have noticed, the TPA mentorship has officially ended about 1 month ago. The prices have been significantly dropped since that because there simply just is no mentorship. I am still here to help all those traders that need help, but it's time that I move on to other things. The first package is the free trading package, which I recommend everybody to get and get the basic knowledge that is going around in trading. What are the basic things that I need to have as a foundation? Get that, figure that out, and join the free trading public Telegram community that we have going as well, where I'm sharing the trade from all the major currency pairs straight to that group. Next is to get the 7 principles of trading. I mentioned a few times here and there already, but that's where I go deep into the philosophy of trading, where we get to talk about what is the 7 hermetic principles and how those relate to trading and how those relate to the marketplace of life. How is it that we can win in life and win in the markets? Third is to join the private community that we have going, where I'm literally sending all the trades that I'm taking. I'm not forcing these trades. I'm not sending trades necessarily to necessarily meet a demand that you have, but I'm sending these trades when I take my own personal trades, and I will share them there. The next and high step is literally just to learn everything I already know about the markets. Everything that I have experienced, even things that I haven't, that I've commented on. My whole last 7+ years of trading is there on that website, where I go through in detail different styles, different methods, different things you see other people doing, how I'm doing it at that current time, different ideas I have, back testing, the list goes on and on. But everything I know is there for you to have with my support. The next question says, may I ask you, what is the difference between the second and the third degree? Will they include in that $9 price? Yes. In the first degree trading package contains everything after, whether that's the first degree, second degree, third degree, the TPA automatic trading semi-trading robot that I have there as well, the TPA tips, any additions that I will make in the future will all be added to the first degree, which is the real starting point of getting that information that you need, of getting all that information that I know. The second degree goes into more basic things, which you see many other traders doing it, different ideas which they might be applying, and mainly how I go about applying those things as well, and my experience with it. The third degree, we go into way more detailed things so we can get more specific entries, better risk to reward ratios. Will it do the magic? For now, there is a price drop on these. We're not sure how long these are going to last. It is something I do plan on keeping, but simply for now, it is like this because I want to be able to give you guys the most value possible. There are so many things in this world that cost under $10, and if you cannot utilize $10 and bring you more money, well, I'll catch you guys in the next video. See you later. This question says, what is your trading routine and schedule? So simply like this, I think the weekend is the most important time for a trader, or just me in general. Over the weekend, I have the time to, 1, review how I did last week. Was it a losing week? How do I feel about last week's performance? Was there a lot of things going on in life? Were there a lot of things on the market? How did all that make me feel, and what were the actual results? Okay. Was it a productive week or was it not? The other side of the weekend is for me to prep for the week to come. And this just goes into just prepping things. But on the charts, I'm looking for things like, is the trend continuing? Is the lower trend still in trend and continuing with the higher trend? Is maybe the higher trend changing? Have we had a few consolidating weeks? All these things go into my general idea before we go into the week. One of the main things is I'm looking for the main direction of the weekly candle, okay? And then from there, I may go through and I look for those few stages in the market where are we in an area of consolidation where liquidity might be grabbed, or are we in a trending situation where we're looking for support and resistance trades, okay? But really, just like this, I don't really go to play things by the session or whatever session the market is in. I simply look for those two periods. Are we in a consolidating market or are we in a trending market? And from there, I know consolidating markets will form that set of an extreme, whether that's to the upside or the downside, before a trending market comes in, where you're not going to really get a lot of consolidation and things just like that. And from the trending market, you then will have a period where price slows down and goes back right into that other phase that it was just in, where it formed an extreme area, and then the trend continues, right? All these things continue ultimately until the trend ends, and then you reassess the situation and you move forward. Really, one of the big things is even though I do a lot of the prepping on the weekend, I also prep right before I go to bed and right when I wake up in the morning. That is really the first and the last thing that I go to. And apart from that, I'm just looking, okay, do we have any opportunities in the market in a viable area? And just around midday, 5 p.m. my time or 6 p.m., I like to be aware. Like I mentioned before, I know when the market closes and opens, there's a high spread. So I take that into account, and I don't really stay active for that 1 hour that the market just opened. Normally the next hour at 6 o'clock Eastern Standard Time is when the spreads like instantly drop back to normal, and then we can get playing again, right? But all that is buffer time, whether that's weekend, morning, right when I wake up, right when I go to bed, and that 1 hour in between. All that is buffer time that I can just chill and reassess the situation. How will I start acting when it's time to act in the market? That's all it is for this video, guys. Thank you for tuning in. Thank you for DMing me on my Instagram, and thank you for the support. I'll catch you guys in the next video.